Hello everyone and welcome back to Explain the Charts, your ultimate destination for precise market insights. Today, July 30th, 2025, we are undertaking a meticulous analysis of the USDJPY currency pair, integrating the latest pivotal news with a deep dive into its most recent candlestick charts. The global currency market has been particularly dynamic, influenced significantly by recent central bank decisions and shifting economic outlooks. Let's begin by dissecting the current events shaping USDJPY, focusing on today, Wednesday, July 30th, 2025. The Federal Reserve, as anticipated, maintained U.S. interest rates unchanged this Wednesday. This decision initially provided a boost to the U.S. dollar, seeing it strengthen against major currencies, indicating market relief or a slight hawkish interpretation. However, this dollar's strength proved short-lived. The greenback later ceded some of its gains, showing a slightly softer tone heading into the North American session. For USDJPY specifically, we've learned the pair saw a notable decline today, dropping to approximately 147.92 after encountering a firm rejection near the significant resistance cluster between 148.80 and 149.40. This recent fall to 147.92 is an important development that occurred after the latest daily candle in our dataset. From a technical standpoint, this outcome reinforces a downside bias, with traders now closely monitoring the 200-day exponential moving average as a potential key support if the downward momentum continues. Further market catalysts include the upcoming Bank of Japan monetary policy meeting this week, which could provide fresh insights into Japan's economic direction. Additionally, the Bank of Canada's decision also looms, contributing to overall market uncertainty and potential cross-currency impacts. The broader market sentiment, characterized by mixed U.S. stock performance and lower Japanese equities, reflects this cautious environment, adding to the volatility observed in USDJPY. Transitioning to our daily chart, which provides data up to the close of July 29, 2025, we observe a fascinating journey for USDJPY over the past year. From its lows in early 2024, the pair embarked on a robust uptrend, culminating in a significant peak around the 160.18 mark in late April 2024. This upward trajectory was driven by a clear divergence in monetary policies between the U.S. and Japan, with the Fed maintaining higher rates while the BOJ adhered to its ultra-loose policy. However, since that peak, we've witnessed a substantial reversal, forming a clear long-term downtrend. The price has consistently printed lower highs and lower lows, signifying a shift in market sentiment from bullish to distinctly bearish, even before today's reported drop. Noticeable sharp corrections, such as the one in early August 2024 and September 2024, highlight moments of significant yen strength, often tied to intervention fears or changes in rate expectations. The crucial resistance area mentioned in the news, between 148.80 and 149.40, aligns perfectly with previous consolidation phases and rejection points on this daily timeframe, making it a critical barrier for any upward moves. Looking at volume, periods of significant drops like in July-August 2024 showed increased volume, confirming strong selling conviction. Our latest daily candle from July 29th, closing at 148.419, shows the pair already under pressure, setting the stage for the further decline reported today. A decisive break below this current support would open the path towards the next major support at 145.00, a level last seen during the strong rally phases. Now, let's hone in on the most recent daily candlesticks, specifically from the beginning of July 2025 through to the end of our provided data on July 29th. We see the pair attempting to establish a recovery from a previous dip, gradually climbing towards the 148.80 resistance in mid-July. However, the inability to sustain moves above this range, culminating in bearish candles with notable upper wicks, strongly indicates seller dominance. The daily candle for July 29th, closing at 148.419, captures the immediate lead-up, reinforcing the downward pressure before the further decline reported today. This recent action on the chart suggests the market was already poised for a move lower, making today's reported drop to 147.92 a continuation of this established trend. Moving to the 1-hour chart, which provides data up to July 15, 2025, we can still gain a much clearer picture of the intraday dynamics and short-term trends leading up to the most recent period. Looking at the last few days captured, around July 10th to 14th, we observe oscillating price action, but with an underlying bearish bias. The volatility has been significant, with wide swings, hinting at the type of market environment that precedes major news events like the one today. While the specific hourly candles for July 30th are not in our dataset, the general pattern of rejection from higher levels can be observed here. For example, around July 14th, prices approached 148.80 before a sharp retreat, mirroring the behavior described in the news for today. Immediate resistance on this historical hourly time frame stands at approximately 148.60 to 148.80, aligning with the pattern of rejection. Traders should be aware that the price action on July 30th, as reported, would likely show a decisive move through previous short-term support levels. The intraday support levels around 147.50, observed in earlier periods, would have been key areas to watch today, as the price broke through them. To gain even finer precision for intraday trading, we turn to the 15-minute chart, showing activity from July 29th. Focusing on the session from approximately 6 Universal Time Coordinated to 1800 hours Universal Time Coordinated on July 29th, we see highly active price action leading into today's news. The pair experienced brief bounces early in the session before quickly encountering sellers around 148.60, confirming it as immediate resistance. Multiple attempts to break higher resulted in doji candles and bearish engulfing patterns, indicating exhaustion among buyers. The sustained downward pressure is evident through the series of lower peaks and troughs, providing clear entry points for short positions on bounces. Observe the higher volumes during the significant downward movements, confirming strong bearish conviction in real time. Key intraday support levels emerged around 148.30 and 148.20, offering minor bounce opportunities before the overall trend continued. This granular view illustrates the building bearish pressure that likely contributed to the sharp decline to 147.92 reported today, July 30th. Bringing it all together, what are the key takeaways for USDJPY in both the short and long term, considering both our data and today's news? Short-term outlook. The immediate sentiment for USDJPY is unequivocally bearish. The decisive rejection from 148.80 to 149.40, combined with the consistent downtrend seen on shorter timeframes and today's confirmed drop to 147.92, suggests sustained selling pressure. If the pair fails to recover above 147.92, we could quickly see it testing lower supports around 147.50 and then 146.00. Long-term outlook. While the long-term trend has shifted to bearish, much hinges on future central bank actions, particularly from the Bank of Japan. Should the BOJ signal an exit from its ultra-loose policy, we could see a more aggressive appreciation of the yen, pushing the pair further down towards 145.00 or even lower. Conversely, any unexpected hawkish stance from the Fed in future meetings could provide a floor for the pair. Key price levels to remember. For resistance, 148.80 to 149.40 is the immediate strong zone, followed by the psychological 150.00 mark. For support, keep a close watch on 147.50, and below that, the crucial levels of 146.00 and 145.00. Unbiased predictions. a retest of the current 147.92 level as resistance, with a pushback down towards 147.50 support, is highly probable, 85% likelihood, in the very near term given the current momentum. A decisive break below 147.50 could swiftly lead to 146.00, 70% likelihood, especially if the upcoming BOJ meeting reinforces a hawkish bias. A significant bullish reversal, pushing back above 149.40, appears less likely, 25% likelihood, in the short term, requiring fresh, strong USD positive news or major JPY weakness. Things to look for. The most critical event on the horizon is the Bank of Japan's monetary policy meeting. Its outcome will be pivotal. Also, continue to monitor U.S. economic indicators, as strong data could reignite dollar demand, providing some counterbalance. Always prioritize robust risk management strategies when trading this pair, given its sensitivity to macroeconomic shifts. Thank you for tuning in to Explain the Charts. Be sure to like this video, subscribe to our channel, and activate the notification bell so you don't miss our next in-depth analysis.